We wanted to have this hearing and talk about the dynamics in the market. Frankly, how do you accurately assess risk and how do you price risk? It's clear that losses are getting more frequent and larger. When you think about insurance, you have to be able to price that in. It costs more money. It happens more often. How in the world don't prices go up? They have to go somewhere. If you look in California, they decided they were going to impose price controls so that you can't raise premiums. And also, you can't drop customers. So you go on site and you say, you know, the gasoline stored in the outbuilding next to the pine straw next to your wood house is a risk. We'd really like you to mitigate it. No. And then the insurer still can't drop the customer? Are you kidding me? You have to be able to price risk. So part of the goal of the recognition of the ESG code that apparently is going to go out of fashion if I listen to Larry Fink, just don't call it ESG, but we're still going to do it. They'll come up with a new label. It's a shape-shifting ideology. But the reality is we are dealing with more frequent and bigger losses, and a lot of those are looking at environmental places like California and wildfires, like Florida where it's weather events, flooding, hurricanes, and in my state, you know, more often it's tornadoes. But if you have to price that risk in order to stay in business, the alternative is things like the National Flood Insurance Program, where we have actually drafted bills we've had hearings on, and we're working to get towards a markup this year. But they don't have to make money, right? They don't, and they don't. They lose quite a lot. The federal government offers the flood insurance program because insurers can't really accurately cover all those things. So it is a supplement to the market, and the federal government is involved there. Terrorism risk insurance, another thing the federal government gets involved in. Overwhelmingly, it's a state issue. And I think the best thing to think about is housing as a state issue. You have different planning and zoning codes because, frankly, the risk of earthquake in California is bigger than Ohio. And we like the idea of building codes. We don't want things to happen in America like happened in Turkey because they didn't have big building codes. We should trust that our buildings are resilient for the area they're built in. But too often, when regulators decide that they're going to be the ones, central planners are going to decide instead of the market, they get it wrong. And they oppose one-size-fits-all rules that don't accommodate all the flexibility that markets need. Prior to coming to Congress, I was in manufacturing. And for me to get the supply chain right, for me to design and build something, I needed some lead time. I can't turn, some things we can turn around quick, but some things take a little longer.
A big and important day is coming up for millions of Americans. President Biden has just announced the official launching of his new relief programs. Billions of dollars in direct financial aid will be provided to those who qualify. My dear friends, please make sure that you watch until the end of this video for all of the details. Also, every Friday and this Friday, I will be announcing several winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dearest friends, the greater your chances of winning the giveaways. Prices have experienced a substantial increase over the past few years. Wages have seen a significant surge and now are outpacing inflation in terms of growth. But nevertheless, the Federal Reserve has been cautious about the rise in wages due to concerns that it might trigger a resurgence of inflation. Experts say that if wage growth stands at 4%, this indicates an inflation rate of 3%. That is above the Fed's targeted 2% rate. Experts say President Biden's Inflation Reduction Act can take little to no responsibility for the drop in the inflation rate. Economists say the factors that did help improve inflation include a decline in oil and gasoline prices from last year's peak, the Fed's raising its benchmark interest rate, and an easing of supply chain issues. But just this week, the Biden administration has officially launched the new income-driven student repayment plan. The repayments will restart this fall. The official launch of the Save or Saving on a Valuable Education Plan comes just weeks before interest will begin to accrue. The interest will accrue on student loans for the first time in more than 3 years. Repayments will resume in October, although no financial consequences will come to borrowers if they are unable to pay for up to 1 year. Education Secretary Miguel Cardona told reporters, "Starting today, millions of borrowers can reduce their monthly student loan bills by enrolling in the SAVE plan. It is the most affordable repayment plan in history. The SAVE plan is another huge step forward in Biden's efforts to fix the student loan system, reduce the burden of student debt on working families, and put borrowers first." The launch of the SAVE plan comes after it has been in a beta testing phase for almost a month for officials to work out the bugs on the website. Those who are on the repay plan or applied for the SAVE plan during the beta testing period do not need to fill out another application. Borrowers who miss a certain number of payments will also automatically get enrolled into the SAVE plan. A senior administration official said that borrowers who want to see the benefit of the SAVE plan before payments restart should apply in the next few days. Applications will take around 4 weeks to process. The administration also announced an outreach campaign to ensure that student loan borrowers are aware of the new plan, which officials say will save borrowers millions of monthly payments. The campaign, called Save on Student Debt, will work in partnership with numerous organizations to make borrowers aware of the plan. The plan will have a 2-phase rollout, as some of the program will be implemented this year and other aspects will not go into effect until July 2024. This year, the income exemption for monthly payments will be raised from 150% above the poverty line to 225%. This means that more borrowers will qualify for $0 monthly payments under this plan. An individual borrower making up to $32,800 per year and a family of 4 who makes less than $67,500 each year will have $0 monthly payments. The federal government says the number of student loan borrowers who will be eligible for those payments will be 1 million in total. Other changes this year include that unpaid interest will not grow if borrowers are making their payments, and income for borrowers who are married but file separately will not be counted. Multiple other changes will also occur next July, such as cutting monthly payments from 10% to 5% of a person's discretionary income for all undergraduate loans. The new program comes after the Supreme Court over the summer struck down the Biden administration's plan to forgive up to $20,000 of student debt per borrower. Well, my greatest and most amazing friends, that is the end of my daily stimulus update video for this Tuesday. My dearest friends, thank you so much for being part of this community and for joining me here every single day. To say thank you, I will be announcing winners every Friday for the Walmart gift card giveaway. My dear friends, if you would like to enter these weekly giveaways, please click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you comment on, dearest friends, the greater your chances of winning these giveaways. Thank you and have a wonderful and very blessed week.